is waiting by to talk about the top 3 stocks that should be on the radar. And Mahima, thank you for waiting by patiently. Apologies for coming late to you. But here's the question. It's a big day today. What are the top 3 on your mind?
Right. So the first one is Astec Life Sciences, which came out with its earnings yesterday. Revenue was up 84%. EBITDA loss has come down from 18.3 to 5.8, and net loss has, however, increased a tad bit from 24 to 40. The other one on my list is Anant Raj. This stock has fallen, and how today? It's fallen to around 534 levels and fallen around 20% in trade today. And this is on the back of the DeepSeek's impact, that is China's new AI startup, which is challenging the US tech giants as well and causing the market drought. Now, in terms of the shift, it's expanded AI through Anant Raj cloud, and the Google partnership with respect to Anant Raj, that is the cloud has teamed up with Google in July 2024. We've also seen a tech sell-off, overall DeepSeek's rise, Sparkle Global tech stocks also decline. So this is another counter which is in focus and it's locked in lower circuit. And the third one is Apar Industries, where revenue was up 17%, EBITDA down 12%, margins have come down to 7.6%, and net profit was down by about 20-odd%. In terms of the key highlight, the margins were impacted due to unfavorable competitive prices from China and lower demand from their exports. So these are the 3 stocks which have seen significant movement in trade today and are definitely the top 3 stocks to watch out for.
Okay, well, certainly watch out for that. Apar is fine, but I think to my mind, Mahima, thanks for making it this point about Apar as well, but the stock to my mind, the stock of the month has to be Anant Raj. 2 days on a trot. Well, if people globally are talking about NVIDIA, and they should, I think locally something which is a collateral damage of DeepSeek is Anant Raj. Look at that crack. And frankly, this last 7-day chart will look horrible as well, because the move has happened in the last couple of days. 1 week, 42% lower. Risks, Aditya, with... actually, I'm sorry, I rephrased my question to Aditya, because in some sense, you can't even blame people who bet, let's say, on an Anant Raj on the data center business, because this came out of the blue. These are dangers with investing in sectors with a high pace of change, because you can't necessarily forecast what may happen to technology, right? But what should somebody who invested in Anant Raj earlier do now? Is it prudent to take a call, because this may well change again too at some point of time?
Yes, first of all, what China has done is they have developed an AI technology which is very, very cheap per se, and that's what is leading to correction in the AI stocks all over the world. But mind you, US will also come out with this kind of technology. It is just a matter of time. How you could have avoided Anant Raj is very simple. The valuation at which Anant Raj was really trading was upwards about 60, 70, 80 times multiple. And time and again over the channel, over the last 6 to 12 months, I have been telling that valuations are extremely aggressive. Rather than chasing momentum, you should try not to invest in these stocks. You look at the solar stocks, they have corrected massively. You look at data center stocks, they've also now corrected massively. Now, if you are a long-term investor in Anant Raj, you should hold on to the stock. I don't think that the story has changed overnight. Market's perception of Anant Raj has changed overnight, which I don't think will affect the business too much. Of course, the valuation may come down, but longer-term investors can hold on. If you are a short-term investor, you invested because of the momentum of the stock moving up, I believe that it is a good time also to cut your losses right now. I don't believe this is a market where short-term investors should nibble in. A similar story is also playing out with a stock called E2E Networks, where L&T had invested at 2,700, and the stock had zoomed up and is now hitting circuit after circuit. So do not invest in stocks where the P multiples are really very high. The market will derate those stocks within a couple of trading sessions. You're already seeing Anant Raj hitting 20% circuits per se. So longer term investors kindly hold on to the stock. Shorter term investors, you need to take a call basis that this is a material development that has happened, and in the shorter term, there could be a disruption to the stock.
Okay.